Hi friends, welcome to my YouTube channel Trade with an Edge. So today we'll discuss about trend. What is trend trading, what is trend, how to identify the trend, and should we trend the counter trend rally also. Okay, so before we go into how to identify trend and which trend to use, how to trade with counter trend, let's first go into straight into the main theme. Okay, so what is a trend? Trend is the general direction of a particular stock or indices. That means in which direction is the stock or indices moving, that is called trend. Okay, we'll again revisit all these things later, but first see what are the different kind of trend and how to identify, because that is important. Okay, there are basically two kind of trend based on the direction. Either trend will be up or down. There will be times when nothing is happening, so that is a non-trending or directionless market. So basically there are two kind of trends, uptrend and downtrend. So I have taken the data and now we'll have a look at what is uptrend. Okay, so in classical theory or in general, what is a trend? Trend means things are going in a particular direction. So trends, you can relate it to our life also. How we will know if someone is growing in life? That means if someone is growing, the better things in life which he or she is having today is more valuable than what he had in the past. Similarly, the problems size will also increase. Basically speaking, let's say someone was happy with getting 10,000 2 years back. If now he is happy with when he gets 50,000. Similarly, any kind of a 5,000 kind of a problem was seemed to be bigger for that person, but now let's say a 20,000 kind of a problem looks bigger. That means the size of the good things is also increasing, as well as the size of the bad thing is also increasing. So in general, trends are also like real life. So what happens in a uptrend? Any high that the price makes is higher than the previous high. Okay, so let's say this is a low. We'll take a starting point for this. Okay, again we'll revisit how we took this as a starting point. But to start now, let's take this level as low and this level is high. This is the reference. So there was a low, there was a high, we had some kind of retracement, and then again we had a high, then we again came down, again we had a advancement, then again we came down, again went up, come down, went up, come down. So if you see this time, this high is higher than the previous high. Okay, and also this low. Okay, we'll take one more low. So this is the second low. Okay, so let me take this for you for better understanding. We will take the second one as the starting point. Okay, so now we are done. So here you see this is the low, this is the high, and the next time we had a high, okay, it went up the previous high, and when it fell down, okay, it never came below the previous low. So now we have a higher high and higher low. So that is the start of an uptrend. Similarly, the next advancement, okay, here the price went above the previous high. This was the previous high, and in the next advancement, price moved above that. Similarly, the next downtrend, it stopped well above this previous low. Okay, so this is again higher high, higher low. Similarly, again when the price moved up, it went above the previous high, and when it came down, it stopped well above this previous low. Similarly here, again the market went above the previous high, and when it came down, it stopped well above the previous low. So higher highs, higher lows, higher highs, higher lows. This, whenever this pattern occurs in any particular stock, that stock is said to be in uptrend. Similarly here again this advancement went above the previous high, and whenever there is a downtrending move, it stopped well above this previous low. Again here also the advancement went above this previous high and the downtrend stopped above the previous low. Here also we again passed the previous high and the low was higher than the previous low. Again this higher high, HH is higher high. Again this is higher than this previous higher high, and this low is higher than the previous low. Again this high, okay, is higher than the previous high, and this low is higher than the previous low. Now if you look at here, we had a higher highs and then we had a higher low. But when again market advanced, it was not able to go above the previous high. Okay, this was 9706 and here it was 9695. So here we had a lower high because this high is not above the previous high. Now we'll see what happened when it retraced. Also we had a retracement which went below the previous low. So now is the trend coming to an end here? Okay, this is first indication that we should be careful what happens in the next move. Okay, because for any kind of trend, uptrend or downtrend, we need two pattern of higher highs, higher lows, or lower highs and lower low. So here in this case we had a lower high, okay, and also we had a lower low. That is fine. Now we have to see if in the next advancement we are making a lower high or it is still continuing. Okay, so here if you see, we had a high, we had a low, the next high was lower high, lower low, and then when for the confirmation, when we were checking this move suppressed well above this previous high and it made a new high. So this doubtful situation here, that whether the trend is coming to an end. Now the doubt is over, and again we are seeing the resumption of the previous uptrend. Again we had a low which is higher than the previous low. Okay, again we had a higher high, again we had a higher low. Okay, again if you see here, if you are taking this low, this is a lower low. Okay, that is the reason if this kind of whipsaws will come in the market, because in a textbook pattern it is higher highs and higher lows. So we think that a clean trend will always make higher highs and higher low and it will go up, but it is not that easy in the real market. In the real market there could be some kind of modification to the textbook pattern. That is the reason slowly we will go to the mechanical way of defining the trend, because here okay, if you see, we made a higher highs and we went below this low. Okay, but this is a higher low if you compare with this previous low. Okay, in a significant kind of low. But if this minor low you are taking, okay, if this minor low you are taking, this is a question mark here. Okay, actually this should be a question mark too. This is a question mark. We should ask the question whether the trend is coming to an end. Okay, I had put the question mark here. Why? Because we had a higher highs, higher lows. Again this higher low is question to interpretation. I mean, we have to ask a question whether the trend is coming to an end, because here the market went below this previous low. Okay, so this is the kind of whipsaw we will get in the market if we are just sticking to the textbook pattern and we are trying to define the trend. Okay, we will come to the mechanical system of defining the trend. So this is the textbook pattern, or textbook definition is, as long as a stock is making higher highs and higher lows, it is said to be in uptrend. So here again question mark. Why? Because this high has not, it has suppressed but by little bit, and again this low is also at the previous low. So this is kind of a double bottom and double top. So still we can say the trend is intact, because there is no counter trend move. A trend is like Newton's one law of Newton. A object in motion is said to be in motion until and unless it is reversed by an external and opposite force. Okay, I don't remember the exact wording, but basically speaking, if something is moving until and unless it is stopped by opposing force, it is considered that the prevailing force will continue. That means if something is going up, until and unless there is something reverse of that, we can consider that this trend is continuing. So here you have to give benefit of doubt to the trend. So in all these question mark kind of places, you need to give benefit of doubt to the prevailing trend. So what is the prevailing trend here? Uptrend. So little bit of fluctuation you have to give benefit of doubt, because let's say you are profitable from here, so instead of putting a stop loss here, you should put somewhere here. Similarly here also, instead of putting a stop loss here, you should put it somewhere here. That means you have to give benefit of doubt to the prevailing trend when you have smaller or minor modification to the textbook pattern of trend definition. So here we had one double top and double bottom, but because market was in uptrend, we have to see what happens to the next move. So if you see, the next move surpassed the previous high, and that's why we can say that the trend continued to the upside. Okay, so now let's go to the same place. So one second. So we were in higher highs and higher lows pattern. Okay, and between there were few places where we didn't have the perfect pattern of higher highs and higher lows. We had minor modification where the highs was not higher, or the low was lower than the previous low. So it didn't work out exactly as the textbook pattern, but we have to give benefit of doubt to the prevailing trend. So here if you see, we had a higher low and then we had a lower high. Okay, again we went below that. So now we have to see the next up move. If this low is broken, okay, this low is broken, that means the trend will change from positive to negative. So we had a lower high, we had a lower low. Again when the market went up, obviously it was not able to go above this high, but the low is well above this low. So still we have to give benefit of doubt to the prevailing trend. And again when we had this up move, it went well above this previous high, and this low is well above this previous low. So higher highs, higher lows pattern continues, and the trend continued in that prevailing direction, which was uptrend. So as long as higher highs and higher lows are being formed, the stock is told, or it is called to be in uptrend. So the definition was of uptrend is higher highs and higher lows. So as long as there are two, there are less than two lower lows, we can consider that it is continuing. So once we have two lower lows, this uptrend will come to an end. So we should try to trade in the opposite direction, or we should exit the long position. For example, here we had the high, then we had the low. Okay, this low is lower than this low. Okay, that means now we have to see the next advancement. Okay, if it is able to cross above this, then this trend will continue. Okay, and how we will know this trend will come to an end? If this low is broken here, then we will come to know that this trend is coming to an end. What we did, similar to the thing that we did, we did here. We had a low here, okay, and we had this high here. Next advancement, we had a high which is lower than this high. Okay, now we are getting cautious that this trend might be coming to an end, and again this downtrending move surpassed this previous low. So now we know that we have to be careful with this trend. So now we need to look if market is able to surpass this previous high, or it is going below this previous low, to confirm that the trend is coming to an end. So what happened here? Here market went here, still indecision because this high is not crossed. Again it went down and it stopped above this low. So again we have to wait for the market to give the clear picture. And what happened? The up move surpassed this previous high and this previous high. So we know that the trend is again continuing, and again we had a low which is higher than the previous low. So we knew that the trend is continuing. But what happened here? Here we had a lower low. This was the low. Now this is the low. Okay, so we had a lower low and we had a high which is lower than the previous high. So we had a lower high and we had a lower low. So now these 2 points are very critical, this lower high and this lower low. Now we need to see what happens in the next move. So what happened here? Again, we are yet to get any clarification or clarity from here, because this low is higher, this low is higher than this low. Okay, again we will wait for here. What happened? Again we have to wait because the previous high is not yet crossed. So we have to wait for the next down move. Next down move, what happened? This low is crossed to the downside. That means now we are in a lower low, lower high. Okay, lower low, lower high kind of pattern. Until and unless the previous high is crossed, this downtrend will continue. So what happened? We were in a down. First we are in a uptrend. Uptrend is higher highs and higher lows, and once we change from that pattern of higher highs, higher low to lower high and lower low, the trend was up. So as long as we were making higher highs and higher lows, market was in uptrend. Once we started making lower highs and lower low, okay, the trend changed from uptrend to downtrend. Also we saw that it is not that easy always that market will oblige us with classical textbook pattern and obvious every time we'll have higher highs and higher lows. There will be complex kind of correction. This is called complex correction. Here we had a lower low and lower high. So market will always not oblige us, or it will not give us classical textbook pattern, because in that case people will just write some programs or mechanically they will make money. So there are times when we have to use our experience and our some kind of logic or money management past experience to see what happens, and at that time we have to give some benefit of doubt and we have to minimize the risk. So basically speaking, as long as any stock is making higher highs and higher lows, it is said to be in uptrend, and once the stock starts making lower highs and lower low, it is said to be in downtrend. So this is how we have to identify the trend from naked eyes. That means without using any indicator, okay, without going to any mechanical setup. How to do this? Plain, we have to do it by going to the chart, and with our naked eyes we have to see, and we have to mark the places where highs and lows are being made, and depending on higher highs, higher lows, will tell this is uptrend, or if the stock is making lower highs and lower low, we'll say this stock is in downtrend. Okay, so if you remember, some time back we had taken a reference point from where we told that this is the uptrend is starting. How to take that reference point? Now we'll see how we took that as a reference point. Okay, so now this is the place. If you see here, we had a high, right, and we had a lower high. So now you are thinking, okay, we'll see what happens next. Again we had a low which is lower than the previous low, okay, and we had a high which is lower than the previous high. So again we had a lower low, we had a lower high. Okay, again this was also complex correction because we stopped above this lower low. Okay, so now we know, okay, something might be happening in the market, and the previous trend which is in downtrend might change to uptrend, and then we have to wait. What happened here? We are not able to went above this high, so the downtrend continues. Downtrend is lower highs, lower low. If you see this is the high, this is the high, this is the high, right? All these highs are lower than the previous highs. If you see this high is lower than this high. If you see this high, this is lower than this high. If you see this high is lower than this high. Low, this is a low. This low is lower than the previous low. Again this low is previous than the previous low. Okay, here what happened? We had a low which is higher than the previous one, so it was not able to cross below this. Then we have to wait. What happened? The high was not above the previous high, so we know the prevailing trend is downtrend, so we have to give benefit of doubt to the prevailing trend and think that this trend will continue. What happened? Again this low crossed. again we had a lower low. Okay, we had some kind of high which is again lower than the previous high. Again we had a low, okay, here, which is lower than the previous low, and again we had a high here. Okay, because I think it is minimized, it is not, it is zoomed in, that's why it is showing like this. So this should be here. So if you see here, we had a lower high, okay, and here also this is the low, so lower low, again we had a lower low. Okay, now if you see, market went up and the low we made is higher than this lower low. So now we should be again cautious that the prevailing trend might come to an end. Then what we have to do, we have to see if this previous high is getting crossed, because the pattern was lower high lower lows, right? Now once we make any higher high, then this pattern will fail or it will stop. So we had a high here, okay, again here we had a high, but this is a false breakout that obviously will come to know after 2 or 3 days. Again we had downtrending move which went above this previous low. So now we still think that this trend will continue in the downward direction. Okay, then what happened? Then we had a high here. This high, what happened is it went above the previous high. So now we know that this trend, the prevailing trend which was in downtrend, came to an end. We had a low and we had a high. So again we have to see for the next move to check whether this trend is coming to an end or this prevailing new trend which is low high. So this will be an uptrend if this will start or this will continue, because this all just started, right? We had a low, we had a high, we had again a high, this high went above this previous high, we had a low which is way above this previous low. So now we have higher highs and higher low, and then we know, okay, previously market was in downtrend because we had lower highs and lower low. Now we have higher highs and higher low. So now the market is changing from downtrend to uptrend. So this is how we have to identify the trend from the chart with naked eyes and just from the price pattern. Okay, so now we will go into how to use mechanical system to define the trend, because we understood that defining the trend just with naked eyes and with this lower highs and lower low, it is not that easy, right? Because there will be some kind of complex correction or complex move within the trend which will not allow us to trade this in a very simplistic manner. We need to give a lot of benefit of doubt and we need some kind of experience, and this is not black and white. Okay, so anyways, as long as we are able to know the general direction of the market, for example, when market was going from this level to this level, if we decided that okay, now this is uptrend, any kind of buying will give us money here. Okay, similarly when the market was coming down, if we are able to define the trend as a downtrend, any place if we sell with proper risk management, we will make money. So in investing, it is very, very important to be with company which are of good quality. In trading, it is very, very important to be with the trend. I am trading since 2007. I have tried counter trend moves also, but from my experience I have seen that trading in the direction of the trend is always easy and better than trying to trade that counter trend move. Counter trend move will come, but we don't know when it will come, and the counter trending moves are very, very small. So it is always better to try to identify the trend. Okay, we should have some kind of mechanism to identify the trend and always trade in the direction of the trend. That forgives a lot of mistakes, and it is relatively easy to make money when we trade with the trend as compared to if we try to trade against the trend. Okay, many a time people try to catch the small downtrending moves, right, when market is in downtrend, which actually that is very, very difficult to make money. If we trade with the trend, even if we are wrong, because the underlying current is in the direction of the trend, it will save us. Okay, so now we discuss how to identify uptrend and how to identify downtrend. there is one more trend sometime. This is called no trend. No trend means there is no higher highs, higher lows pattern, or lower highs, lower low pattern. So basically market is in a range, or the stock is in a range and doing nothing. That is called no trend or sideways trend. But basically there are two trends, uptrend and downtrend, and obviously there will be time when there is no trend. So now we'll go into how we can use this theory, because what we discussed till now is all theory, right? And that doesn't, that is very, very important to understand, but just the theory will not give us money in the market. We need to have practical things. How to use that theoretical knowledge to make money is important. So what is trend? Trend, this is the general direction of a stock, whether it is going up or down, that is called trend. Okay. Now what are the different kind of trend? Based on the direction, there are two kind of trend, right? Uptrend and downtrend. Okay. Now this is important, based on the duration. Okay. Based on the duration, there are basically three kind of trend: long term trend, intermediate, and short term. Okay. So we'll see how to take that into consideration. So long, then intermediate, and short term. Okay. Okay, so as for Dow theory, long term means any trend which is more than 1 year, and it can continue for many years. That is called long term. Intermediate term is anything from 3 weeks to 3 months is called intermediate trend, and anything below 3 weeks is called short term trend. Okay, so now we have to decide which is our primary trend which we are trying to trade, because if someone is a long term investor who wants to invest for 10 years, 5 years, like that, he is obviously a long term investor or trader. Similarly, if someone is trying to keep something for 3 to 4 months, 6 months, 8 months, like that, he is a intermediate term player in the market. And people who are trying to trade from 1 day till 3 weeks, they are short term player. So there is no magic number. However, 200-day and then 50 period moving 200 period moving average, okay, and then 50 period moving average, and 10 to 20 period moving average is good enough for us to identify any kind of long term, intermediate, or short term. Now we'll discuss how to do that. Okay, so basically there is no magic number. Some people will tell, I have seen this kind of discussion, why 200-day moving average and why not 199 or 201. See, there is no answer to that. It is like watching the same movie. Many people are watching the same level or same line. That is why it has a self-fulfilling fallacy. That means there is something in the market. There is some kind of, people follow some kind of rule. And because many people follow that rule, it becomes more powerful. 200-day period moving average from long time. It is used by many institutions, mutual fund, for their investing decision. Basically, it is said that any kind of accident in a stock happens below this 200 period moving average. Okay, so from ages people are using this 200 period moving average to identify the long term trend. Okay, so rather than going into any kind of silly discussion that why 200 and why not 2, 3, 4, there are many people who will say 89 is a Fibonacci number, so I will use the 89 period moving average. Basically, we need to use something which is used by others, because they will take decision at those particular point, there will be some kind of movement in the market. If we just take some 203 period moving average, who is looking at that or who is trading? Okay, so there are things like previous day high, previous day low, then 200 period moving average, 15 period moving average, 20 period moving average. This other people also see, they also look at that, they also take decision based on that. That is why we have to use them. So there is no magic number. So now we will see how we can identify the trend in a mechanical manner. Okay, so how to do that? What we can do, for any, if you are a long term trader or investor, okay, many people think that there is some kind of theoretical difference between trader and investor. Basically the difference between trader and investor is the time frame. If your time frame is really longer, you are an investor. If your time frame is shorter, you are a trader. So that is why I always while speaking, I always mix this trader and investor, because for me both are same. Only thing is the change, the time duration they allow their investment or their vehicle. So we can take a moving average. There are two kind of moving average and moving exponential. Generally I take the moving exponential. You can take anything, fine, because we are not looking at a exact level. Basically we are looking at a general trend in the market. So if you are using the normal moving average or the exponential, it doesn't make any difference. Okay, so moving average, exponential will take. Okay, and we'll plot the 200 period moving average here, and that will define our long term trend. Okay, so okay, now this is the long term trend of the market. So if you see here, this 200 period moving average was below price, so price was above this 200 period moving average, and we are making higher highs, higher low, some complex higher highs, higher low, but basically market was in a simple uptrend, long term uptrend, because 200 period moving average was below the price. Here we had one close or two close, and again we went above that, and this is how we identify the long term trend. And if you use the moving average, okay, so that will give a mechanical kind of view to the market as far as trend is concerned. We should not look at that moving average number. It is like that cluster of the number, that area where this 200 period moving average is there. See here, if you see here this area is 200 period moving average. Market came down here, and in that 1 week it tried to break that, and it was not able to break, and again it continued. Okay, so here what happened? Here again market came below that, and we had a gap down somewhere, and market went below that, and it was not able to cross. Here it was meandering. So we can say that the trend was up. Now the trend lost its momentum, and we can either have a sideways kind of movement, or after some kind of consolidation the market will again continue its uptrend. Okay, so this is what we can conclude from here. This 200 period moving average is moving upward, and price is also moving above that. So basically the long term trend is up as long as this stock or this index is above the 200 period moving average. Whenever stock is closing below 200 period moving average, that means the long term trend is turning from up to down, right? So how to make use of this 200 period moving average? You should plot that in the chart, okay, and always have a look at that 200 period zone, not at a particular level. See here, this 200 period moving average was at around 11,600, and after the budget we tried to go below that, but market was not able to go below that, and we bounced back. So if you have this 200 period moving average, and there was a previous low around this 11,500, so you combine, okay, this 11,500 was a previous low, and this is the 200 period moving average. So this range is going to be critical. So whether we should not be aggressive with our short position at this place, or we should look to buy if there is any kind of reversal. So we have to combine multiple things. Any one particular indicator is not self-sufficient in trading. We have to learn everything individually. Let's say moving average we have to learn individually, then momentum indicator we have to learn individually, candlestick, and then FNO analysis like open interest, and then put call ratio, fix. So once we learn everything, and then we have to combine everything, and we have to see if there is some kind of logic or sense being built in the market. Just taking one thing and trying to trade is not going to help. I did the same thing during my initial days. I just used to trade with MACD or with a moving average, and then I saw no. When there is confluence of 2-3 things, okay, generally any kind of move, there will be 2 or 3 kind of indication. Mostly there is price, okay, and there is momentum, and there is the volume. So out of these 3, at least 2 should support. The price should be telling one thing, and that thing should be supported either by volume or either by momentum. When all the 3 are telling the same thing, that is price, momentum, and volume, okay, it is always better. Just with one indication from one of these, we should not trade. So this is moving average is mostly price based indicator. So now we are just analyzing the price. I will make videos on momentum, open interest, and we will try to learn everything in isolation, and then we'll try to use everything together to see if there is any kind of sense from the combination of everything. So what we have discussed, we understood what is trend. Trend is, there are 2 kind of trend, uptrend and downtrend. Uptrend means higher highs, higher lows. Downtrend means lower highs, lower lows. And there will be some kind of complex correction in this trend. So it is not always very easy to define a trend with higher highs and higher lows, because there will be sometime little violation of that, and again market will continue in the same direction, okay, or in the reverse direction. But there will be some kind of complex correction or complex counter trend move. That is the reason we want to have some kind of mechanical system to identify the trend. So as per Dow theory, there are 3 kind of trend. One is long term trend, which is 1 year and above. Then there is intermediate term trend, which is 3 weeks to 3 months, okay, and then we have this short term trend, which is below 3 weeks. So once we learned about these 3 trend, long term, intermediate and short term trend, we saw that if we are an investor, we should have always the 200 period moving average in our chart, the stock which we are buying, or the stocks which are in our portfolio, and if market is closing below that, we should exit, and again we should re-enter when there is a close above that. For example, here if you just sell it, again when the market came here, you can buy it. So we are losing nothing, but we never know when there is a close below 200 period moving average what might happen. So similarly, if we sell it here, right, some kind of consolidation, and again when market went up, you might have again re-enter somewhere here. So we are not losing much, but we can sleep well. So for long term trend, we should use the 200 period moving average. Okay, now the intermediate term trend. Intermediate is 3 weeks to 3 months. Okay, so if you look at 3 months, in 1 month we have 20 days. So in 3 months we have 60 days, and there will be some kind of holidays, and also 50 period moving average is a good enough moving average to identify the intermediate term trend. See, again there is no fixed number. Why 50? Why not 35? Why not 60? There is no permanent number. However, again this 50 period moving average is a self-fulfilling fallacy. That means because more people are following it, it is becoming important. Okay, so there is no fixed number. We have to look at that place where this 50 period moving average is, and we should use this as the parameter to identify the intermediate trend, that is 50 period moving average. So if you are an intermediate term trend trader or positional trader, basically this is good for the positional trader. So if you are a positional trader, it is better to trade as per the 50 period moving average. Okay, so we'll plot the 50 period moving average here, and we'll see how the intermediate term trend is doing, and based on that we should take trading decision, and after that we'll come to the short term trend. Okay, because I believe maximum people trade with the short term trend. Obviously there are people who trade with the intermediate term trend also. So if you see here, there are places where market is above this 50 period moving average, and that means the intermediate term trend was up. Again, when market closed below that, the trend turned from positive to negative. Again, we had this positive trend or uptrend. Again, they closed below that, we are in downtrending. We had this intermediate trend turning down. Again, we saw that it changed. So basically speaking, as long as market is above this 50 period moving average, okay, we'll remove all this cluster of, we'll remove all these indicators so that we can look at very clearly. Okay, okay, let me remove this format. Okay, give me a remove, delete. Okay, I don't know why it is not checking. Okay, we'll refresh the page. Okay, so till now what we discussed what is trend, how to identify the trend. Okay, so there are two ways to identify the trend, visually and mechanically. There are two ways. Visually means we will look at higher highs and higher lows to identify the uptrend. Similarly, lower highs and lower lows to identify the trend. Okay. Also, we discussed that basically there are three kind of trend in the market: long term, intermediate, and short term. So for the long term trend, we will use the 200 period moving average. We will use the 50 period. For the intermediate term trend, we will use the 50 period moving average, and for the short term, we will use 10 to 20 based on the company. So I generally use the 20 period as the short term trend, and this 20 period is thus gravity. We will discuss what is that gravity concept in this 20 period moving average. Generally we have Bollinger Band, right? So 20 period moving average is the middle of the Bollinger Band. So whenever there is overstretch, we will Bollinger Band in a separate video. But what I am trying to say, 20 period moving average is basically the center of gravity in a market when we are using the Bollinger Band. So what we are going to use? We are going to use this 20 period moving average from the long term trend. For intermediate, we will use the 50 period moving average, and for the short term trend, we will always use the 10 period moving average. Okay, 20 period moving average, I will make a separate video on Bollinger Band, and when we are using the Bollinger Band, we will use just 20 period moving average. But in general or always, we will use these three moving averages: 200 period moving average, 50 period moving average, and the 10 period moving average. Okay, that means if the market is above the 10 period moving average, the short term trend is up. If it is below 10 period moving average, the short term trend is down. Similarly, if the market is above 50 period moving average, the short term intermediate term trend is up, and if it is below that, it is down. Similarly, for long term trend, we will use this 200 period moving average. I think that is pretty clear till now. Okay, so now let's set up our chart again. We'll go to the candlestick chart pattern. Okay, because it gives more information than a normal chart. And now we'll try to change the color. Uptrend should be positive, close should be white, and negative should be black. Okay, okay, I think it is reversed. This is positive and this will be now black, downtrend. Okay, so this is how we'll set up the chart. We should always have three moving averages. Okay, first we should have the 200 period moving average. to identify the long term trend, and then the 50 period, and then the 10 period. We will also use the 20 period moving average, but I'll tell you that in the Bollinger Band, because Bollinger Band is based on this 20 period moving average, and that also works beautifully. That is also one of my favorite indicator through which I analyze the market. So we'll cover the 20 period moving average in a separate video. Okay, and for now we will use these three moving averages, that is 200 period, 50 period, and 10 period moving average. Okay, so we have this. Now we'll see the 10 period. We'll change the color also, because that is also important. If all the color are same, so basically what I'm trying to do, I'm trying to do it live. I can always prepare some PPT and I can show you, right, how to do that, but we can do it like we're doing in a live market, because I don't care, taking some time to put some indicator, because I'm a trader. I put my own money. Okay, so this is fine, that if we are trying to do it as we are doing in the live market. Okay, there's no point being showing people as we are perfect and everything is ready. No, this is how we generally if any trader, he will set up his chart first and he will try to see how the market is behaving, correct? So similar way we are doing it in the live chart. Obviously market is closed, but you can take this video as a very starting point or starting point. And if you are not using the trend till now, I urge you people to use trend. Okay, so basically you should always use, I would advise, or I will urge that you use three moving averages: the 200 period moving average for the long term trend, the 50 period moving average for the intermediate, and the 10 period for the short term. And any stock or any indices you are trying to trade, you put them and you see what the market or stock is doing as compared to these three moving averages. Okay, so that will help you in identifying the trend and trading in the direction of the trend. Okay, so now we'll go to the next point. What is the next one? This is okay. Now the counter trend move. Obviously there will be time when the trend will come to an end, right? Because if the market is in uptrend, it cannot continue to be in uptrend forever. There will be time when the uptrend will come to an end and we will get downtrending move. So should we trade the counter trend move? Yes and no. Yes means once the counter trend move is confirmed, we should trade that. But initially when we have this benefit of doubt kind of place, right? If the market is in uptrend, we are getting a move which is opposite to that, we should give some kind of benefit of doubt to that trend. And once that is confirmed that now the trend has changed from positive to negative, we should trade. That is my recommendation. Obviously there are people who try to trade the counter trend, the very first instance of the counter trend move. I have done this during my initial years, and that is really horrible. It takes your confidence out, because your market is in uptrend, you are trying to think that any kind of down move is a counter trend move and try to trade that, and keeps repeating that. It takes money and we lose that opportunity of big uptrending move. So I make it simple. As long as there is no confirmed opposite trend, let's say market is in uptrend, once we get the confirmation that it has changed from up to down, then I take the downtrending moves. Similarly, if the trend is down and then we get the confirmation that there is a change, then I will take the uptrending move. So basically we try to combine everything now. So we look at higher highs, higher low also when we are checking the uptrend, and we will also combine the moving average, the three moving averages, and we will see if the trend has changed. So counter trend move, yes, we can trade, we can trade that, but it is better to wait for a confirmation and then take the counter trend move, rather than trying to predict any kind of counter trend move. If you try to predict that as a counter trend move and trade, it will cost a lot of money, energy, and we will lose a lot of opportunity. Okay, so how to check if the trend has changed and we should take the counter trend move? Price. Okay, so basically from the price we should see that is candles. There should be some candlesticks formation in the chart, and the moving averages should tell us that now the momentum is changing. So price, how will come to know, how will come to know the price change of the move? Through candlestick pattern and moving averages. Momentum, in momentum I will make separate videos. There will be multiple indicator which we can use to check the momentum of a particular move, or to identify that okay, now these are the momentum indicator, and we'll see what the trend is doing in the eyes of those indicator. So what we can use RSI, we can also use MACD. I prefer MACD, I will make video on that. And then we can use stochastic. Okay, and then there are many indicators, but any one or two should be fine. We should not try to use so many indicators that we forget the price itself. Many people put so many indicators that they forget the price. So basically for momentum, as long as we are using just one indicator, it should be fine. And also for the price we can always use one more indicator to check the trend, that is called ADX. ADX is average directional index, that is for the trend. Okay, and for the momentum, what is price? Price means is the moment of the stock, right? Momentum means how fast it is moving. Let's say one car is being driven to the hilltop of a mountain. Okay, so the car is going. Now the speed with which the car is going, that we can see, or that is the price. Now what is the momentum? How we will know that the car is reaching to the hilltop? The speed of the car will reduce, it will diminish. So momentum means the speed with which the price is moving, that is the momentum. Okay, so let's say one stock moved from 100 to 200 in 5 days. Okay, so there is a 100-point move, 100-point movement, it happened in 5 days. Let's say from 200 to 300-point move, it is taking 50 days. What does that mean? That means the trend is still up, but the momentum has diminished. Initially it was increasing faster and now it is increasing lesser. So that is momentum. So to identify a counter trend move, or to identify that the prevailing trend is coming to an end, momentum is very important. Okay, so the idea of today's video is only to go into moving average, which we discussed. I will make separate video on momentum, but in here we are discussing how to which all parameter we should use to check the counter trend, or to get the confirmation that the trend is coming to an end. There are three things basically we should use. Price, we should look at the price, that we saw that we should use the moving average. Okay, I'll put it as MA. So moving average we will use, and then ADX for the price. Okay, and then for the momentum, any one of this, and the volume. Okay, once we know about the price and once we check the momentum, now we have to look at the volume, because if there is confirmation from the volume, then that will provide one more edge into our trading. Let's say for example, here when the market was coming, if you remember in my daily videos, when the market is coming here down, the selling by FIs is more. That means there is heavy selling. That means this uptrend. Okay, now first we got the confirmation in the candlestick. We had a dark cloud cover. Sorry, this is the bearish engulfing. So we had a bearish engulfing. Then the price closed below 10 period moving average. Then the price closed below 50 period moving average. Okay, if you see any momentum indicator, okay, we'll see how the MACD was behaving here. Okay, so we looked at the price. What the price was telling? Price was telling that it is coming to an end, the uptrend is coming to an end, and we are getting some kind of downtrending move. Okay, in the MACD I change the setting. For me, I always use 3, 10 and 16. I'll explain that in the MACD video. Okay, for the time being we'll just use this whatever I use. So 3, and then we have 10. For now just use the setting or see how we are using. I'll make separate video on that. So 3, 10 and 16. Okay, so now see how price is doing and momentum is doing and the volume is doing. So we had a clear uptrend here, right? Because market is well above this 200 period moving average, 50 period moving average and the 10 period moving average. Now all of a sudden we had this close below 10 period moving average and also below this 50 period moving average. Okay, and this momentum indicator is going down. If you see this red line, it is going obviously down, right? And this blue line is below that. So that means the momentum here itself, the momentum slowed down. See here, if you see here, this is a negative divergence. We'll try to plot that so that we are clear what I am trying to say. If you see here, this is a lower high in the momentum, and in the price has made a higher high. Okay, the momentum has made a lower high, and if you look at the price has made a higher high. So price is going, this is like the car is going in the direction of the mountain, but the speed is slowing because there is steep resistance. So if you see here, the price made a new high and the momentum made a low. Okay, so we got the indication from the price that now the 10 period moving average is not providing support, also the 50 period moving average is not providing support. So from the price here we had a dark cloud bearish engulfing, and then price closed below the moving averages. So we got the confirmation from the price. Now we also got the confirmation from the momentum is slowing down, also the MACD turned down. Okay, and now volume, how will look at the volume? At this place the selling by FIs DIs was increasing. That means now we have the confirmation from volume also. Okay, so for volume we'll see the open interest, put call ratio, change in OI and VIX. I'll make separate videos. Basically today's video, the agenda is how to identify what is trend and how to identify the trend using moving averages. Okay, and we will again learn about momentum and volume in separate videos, and in the end the idea should be to combine everything and look at in a holistic view. So hopefully today's session will help you to identify the trend using higher highs, higher lows, lower high, lower lows pattern, and also you can use the mechanical way, that is through moving average you can identify the long term, intermediate term and short term moving average. And also we should know that along with price we need to look at the momentum, which is through RSI, stochastic or MACD. And also once we have we have analyzed the price, we have analyzed the momentum, then after that we have to look at the volume, okay, which is the open interest in case of any future and option stock. So once we got confirmation either in two, so the price we have three: price, momentum and volume. So if we get all three, confirmation from all three, it's very good. If we are getting two, it is also good enough. However, any one indication is not enough. We should give more room, because market is not always it doesn't always run in textbook pattern. So just one pattern, we should not put too much emphasis. We should not emphasize one pattern too much, and we should always use for multiple confirmation. Okay, so that's all. And then please mention in the comment section what all topic you would like to learn about. Anyways, on my own I'll make the videos based on the how I use in the daily analysis. So I'll try to upload more videos. So take care, thank you, and bye bye. Yeah, and please see, if you like the video, please try to please subscribe my channel and also share with your friends. Thank you, bye bye.